Good weekend all. Ira Epstein with your weekend edition of your Spider ETF video. And this is going to be a wrap up with the weekend charts. In other words, we're going to look at week charts, not a daily chart. And this is Sunday, the 1st of May. So as we look at the markets, you can see Amazon down huge. I mean, it had a really ugly 24-hour period here. Tesla down as Elon Musk sold about $8.5 billion worth of Tesla stock. He said he doesn't have to sell anymore. That probably puts the market something with the floor there. And the question is, what's really going to go with Twitter? Now, Twitter's really a buyout at around, I think if they said $54.20 a share. Why is it trading down $5 from there? Somebody thinks something isn't going through. Otherwise, that's almost an 8-9% gain if you buy it here and it is taken out. So something going on. I wonder if there's an option strategy there where you can buy the stock, write a call against it, and see what goes on. I would imagine that exists. If you take a look at the stock indices, they all got hit pretty good. Even TLT got hit. Now, Wednesday, we get the FOMC meeting. Then we get our big jobs data, our employment data. That's going to come out on Friday. So it's going to be a week with an awful lot coming out. The Fed boys are all silent until the meeting's over, so I wouldn't look for anything from them. As we take a look, I'm going to continue with, for a few days here, our PDBC. I brought this on last, I think, Wednesday or so. And this is the Invesco Actively Managed Exchange Traded Commodity Fund Trust. And the reason I'm bringing that on, I've asked you for different markets you want me to go with. I want to shake things up and give us even more to look at, both on our daily and our weekly. So I'll be doing that for a little bit now. But as you can see, you've been climbing. The commodity markets have been on fire. If you look at corn, wheat, soybeans, just unbelievable prices. When you look at the swing lines, you got higher lows, higher highs. You're in an uptrend. You're over the 18-week average in red, and that number just crossed over the 200-week. Now the question is, if you can cross over the 100 and the weekly chart, you'd have the short term, the 18-week, over the medium term, the 100. The 100s are already over the 200. Why not? If that's there, you might be looking at the market coming back up to these numbers. When we take a look at Bollinger Bands, the resistance point is the 1992 level out of that. Now, we haven't hit a Bollinger Band, very frankly, since last November. Even with this market that has gotten bullish again, remember when it fell out of bed back here, it hasn't come back up. That would be a sign the market's on fire again. So I'd be looking at that to see, can it get there? And pay attention to Bollinger Bands. They give you ideas in the market. Example, when you fell back here, and I know traders going, oh, the market's falling apart. And I was telling traders, better be careful. You only stay 5% of the time under that band, and bingo. Up here, when the market was over the band, same thing. So I get people all the time telling me, oh, Ira, look at it's more than 5 days in a row or 5 weeks in a row over it. And I go, yeah, you're on borrowed time. It's going to go the other way. They'll tell me how wrong I am, and inevitably, it's not the way it is. It's not me. It's how the algorithm is designed. When you look at the slow stochastic momentum, it's up. So we have the trend up, the bias up, target 1992 or higher, wherever that Bollinger Band comes in this week. KBE. So for the first time, you're going to hear me saying, I think you're in the area where you're going to find the support starting to come into this market. Now, it might take getting through the FOMC meeting on Wednesday for it to digest whatever the Fed is going to say about interest rates, balance sheet runoff. The market is anticipating a 50 basis point hike right now, and for June and July, 75 basis point hikes. Nothing's baked in, but that's what the market is looking at right now. And the balance sheet runoff, which is the equivalent of adding more to the interest rate sector. But you're into support. I mean, if anything, this is certainly a short cover area in the market. In the industrial sector, still bearish. Lower highs, lower lows. You're again into the short covering zone. If you've done that at the Bollinger Band each time, do you think you've been hurt? I don't think so. So I'm going to say it again. This is where I think the short covering is going to come into the market. Momentum is still down. So between here, maybe you reach for the 100-week average. That could happen. But I think rallies back towards the 18-week will be where the traders look to go short again in the marketplace. You heard me, short again. Then on the energy sector, you lost the embedded reading. That doesn't happen too often, but you take a look. The number is under 80. It's at 77.95. Now here's how this works. If you don't recoup it back over 80 by Friday, the close of business Friday, the odds favor what? You're just going to go to the 18-week average. Well, for all purposes, it's another $4 lower. I mean, it's still a nice move. It's about a 5%, 6% move from where you're at, but that would be the target around the 71.01 level at this point, wherever that 18-week average comes in. On SPY, you've hit your target. You've gotten down now to the lower Bollinger Band. Did it this week. I think short covering is showing up between here. Maybe you reach for the 100-week average, but I think you're in a zone right there. In the gold market, what a disappointing market. Each time it makes a run, it tries to get itself up and make a run towards these highs, it gets thrown back. Now, I'm not a bear on gold. How can you be bearish when inflation is running this hot? And that's one of the things that the gold thrives on. What's the headwind is that so many central banks are now raising interest rates. When you do that, gold's a non-paying asset. It's now fighting higher interest rates, something it didn't do for a decade, and that's the headwind that it gets. When we look at the gold miners, well, if you got a trouble with the asset of gold, you're going to have trouble with the gold miners making money, and that's what you've got. You got the higher high, the lower and low right through here. You can see that here in ARK, by the way. Kathy Woods, I saw that she got, a couple of $100 million thrown into the fund again. Bottom pickers love to pick bottoms. They want to say, oh, eventually I picked this up so cheap. But I'm sure they set it at the 100-week average back here at the 102 level. You have that. And there they thought they were getting a deal because you were at 159.70. Now, this is not going to go to zero. So there is a value point. What it is, the market will tell us, but we haven't reached it yet. In Amazon, you sliced right through the lower Bollinger Band. We have done that before. You did it at the beginning of the year as well. And the reasons they're giving for all this make so much sense. People are going to stores again. I see the logic to all that, and so do you. You can also make arguments they're cutting streaming to a degree. So Prime, their cable viewership, that's falling too. I see all that. You saw what happened in Netflix. I wouldn't get overly crazy on it, but it is certainly in a trouble area. When we come to Apple, you can see how the market is back down to the lower band. Could you sink more? You could. It's going to have problems. As I told you, I don't believe a thing China says when they say, oh, their factory's open and things normal. The factory might be open for Apple, but what about the goods that the factory has to get from other manufacturers, and they didn't say that they're open. This is what bothers me. Assembly's one thing, manufacturing the parts, and the parts that make up the parts become the problem. Either you're locked in as an economy or not, shut in, whatever they want to call that. In Tesla, well, we know what happened here. This came down because Twitter. Just name it Twitter. It's not because they don't have demand for their cars. They do have the demand for their cars. Could it sink back into the 756 level? Oh, yeah. If investors want to punish this market and say that Mr. Musk is going to have too much attention turned towards this, SpaceX, and he's not paying attention to Tesla, they can take it where they want. Then we get to Twitter, and here's the thing you have in Twitter. You're up at key resistance, the 100-day average, 100-week average, and the upper Bollinger Band. That's pretty formidable. So when you got up there and the market was running at that, I was telling traders, because they were saying, what do you think? I said, I see a resistance point there. Certainly it slipped and went through it, but now it's come back to it. So can it mount anything here? I doubt it. Pretty strange for me to say that, but I doubt it. If I'm wrong, well, you're going to 54.20. You're not going beyond that because that's the buyout number. With that, I want to remind you, you hear me talking all this time about the enhanced Bollinger Bands, what they mean, how you play with them. Well, by timing the slow stochastics with them, you get some ideas. Take a look at this and remember, at any time you can just move your cursor up here. It'll take you to where my course is. I'm Ira Epstein. You have a great weekend, and I'll see you all tomorrow. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.